keep you updated on the capital and financial markets. Here is a recap of what happened. FIMM has publicly reprimanded two unit trust scheme consultants for their respective breaches of the Federation's rules. In a statement yesterday, FIMM said it has reprimanded Naji Abdul Hamid, a former UTS and private retirement scheme consultant of Public Mutual BHD, as well as Yap Zhen Kang, a former UTS and PRS consultant of Public Bank Berhad. The FIMM noted that the public reprimand imposed is to send a strong message that it will take action against those who fail to comply with any rules it issues. This is to deter UTS and PRS consultants from committing any misconducts and reminding them that it is crucial to observe FIMM's rules when marketing and distributing UTS and PRS in Malaysia to protect the interests of the investing public, it said. The Securities and Exchange Board of India has asked mutual funds not to highlight or assure returns to investors. The capital markets regulator has directed the Association of Mutual Funds of India, the trade body of the mutual fund sector, to stick to the approved advertisement code as part of the SEBI mutual fund regulations. In a letter sent out on the 3rd of March, SEBI noted that it has seen some advertisements where some mutual funds have assured investors in pamphlets and brochures with a fixed sum of money if opted for a systematic investment plan and systematic withdrawal plan. It has been noticed that some of the asset management companies are indulging in practices relating to advertisements, which are not in letter and spirit compliance with the advertisement code prescribed in SEBI Regulations, 1996, SEBI said. SEBI also noted that illustrations provided in the advertisements, presentations, brochures, pamphlets would lead investors to believe that they will receive fixed returns on their investments. Disclaimers and assumptions are in fine print that is likely to be missed out by the investors, SEBI said. China's sweeping changes to the financial regulatory system will see the central bank lose some of its functions to a new and enlarged oversight body, leaving it focused on broader economic and financial stability management. The banking and insurance watchdog will be absorbed into a new bureau, a National Financial Regulatory Administration, to oversee all financial sectors except the securities industry, according to a plan released at the National People's Congress on the 7th of March. Under the revamp, the People's Bank of China will no longer have oversight of financial holding companies and financial consumer protection. It's a similar regulatory model used in Australia, which has 3 separate bodies overseeing the financial system. In fact, a PBOC advisor said in 2018 it was drawing on the experience of Australia as well as the UK as it shapes its regulatory framework. European asset managers lead the way on responsible investment compared to their North American and Asia-Pacific peers, a report has found. The report, Point of No Returns, from UK-based responsible investment charity Share Action, found a wide variation in performance, with only a small number of asset managers performing consistently well across all themes. The worst performers managed a disproportionately large volume of assets, and include 4 of the world's 5 largest asset managers. Biodiversity continued to lag behind the other themes in terms of performance. The findings are based on an assessment of the policies and practices of 77 of the world's largest asset managers across a range of environmental and social themes. The report ranks their investment performance in terms of governance, stewardship, climate, biodiversity and social issues. The future of financial technology in Hong Kong will rely on young blood and new ideas, and the city offers many advantages that will help to nurture the sector, industry leaders told the conference. The importance of connecting young people with fintech is obvious because digitalization in the financial sector will continue to accelerate in the years to come, said Howard Lee, Deputy Chief Executive of the Hong Kong Monetary Authority. The younger generation is really the major source of new talent and, more importantly, the source of new ideas and innovation, which are so important to the future of fintech. This has been the FIMM TV Weekly Recap. Be informed, stay updated. Be sure to like, share and subscribe.